Ladies and gentlemen, Kim here. Welcome to the weekly update. Hope you guys had a good day trading today. Hope you guys are enjoying this Thanksgiving holiday weekend with your families and friends. I hope that you guys are not letting this market to ruin your Thanksgiving weekend. As I analyze this market long term, I hope that you might feel better, more at peace and calm, and not be grouchy or upset or aggravated today. This is a good year. Do is up 26% year to date. We're in an uptrend. Market will see a fluctuations. So why do you let this market, right? You had a fantastic last night with family having dinner, Thanksgiving dinner, and you got up this morning hungover on too much sugar, sweets you ate last night. And then you looked at the market, and market is down about 2% today, and all of a sudden, the whole day is ruined. And if this is you, you're not doing it correctly. So let me advise you and suggest you and recommend you that let's look at the long term, understand the big picture, knowing that the market fluctuations is all part of market, being in the market, being participant in the market. You must learn to understand these fluctuations. Then you will navigate this market at peace, calmness, and cool, and you will able to survive and ultimately thrive in this market. S&P 500 currently is year to date up 25%, NASDAQ 27, Dow 17, semiconductor 40% there. Russell 2000, 20%, transport 25, banks 36%, energy 60, 50 some percent. And looks like got some laggers like biotech is lagging, healthcare is up, home builders making 45% move, utilities lagging, retail up 55%, emerging market heavily lagging there. Bitcoin is up 45% year to date. Gold, silver, miners, obviously these guys been getting or struggling rather this entire year. Negative numbers. Hopefully, I think possibly next year they'll have some good numbers though. Looks like dollar is up a little bit this year, along with the oil up 70%. Treasury bond down, obviously with the equities being up. Same with the VIX down, obviously with the equities being up. In tonight's weekly update presentation, we're going to be sticking with the S&P 500, NASDAQ, gold, and grayscale Bitcoin here. So let's start with S&P 500 here. Obviously, this is a daily chart. We're looking at this much longer term now, right? When we analyze the 65-minute, this is all we're looking at right there. That's it. This is what we're looking at pretty much every single day, that little blip there. So it makes sense for us to understand the big picture, knowing that there will be up and down shenanigans. But you must learn to ride these up and down shenanigans like a surfer is surfing up and down on the waves to able to survive and thrive in this market. And something I like to talk a lot about is missing out opportunity. The opportunity cost is big because you were so scared after COVID. When COVID was ramping, there's so many opportunities were there. If you missed out, there is that opportunity cost, associated with that recent move, because the market, it was a very, very difficult year, right? Because this is how I want you to see it. I want you to look at this way. You can see this entire year, right? This is entire year right here, 2021, today, that entire year. And I want you to look at this objectively here. This entire year, I circled 2 times where we saw that smooth rally. First time we saw that happening was in April, and second time was in October, looks like, right? Did you know that we've been in this 50-week trading sessions this year in 2021? 50-week, right? 50 weeks of trading sessions. And these are only 2 weeks. That's 2 weeks, and that's 2 weeks. That's 4 weeks. Out of 50 weeks, there were only two weeks time where we saw that smooth rally. So if this is all you're looking to capture, just to be part of a little bit of that smooth rallies, you have 10% chance, less than 10. Think about this, 50 weeks, and there was only been 4 weeks that we saw smooth rally in April and in October. That's like 10% chance you can have to capture this for this entire year. So you see how so many people are looking at the market in a wrong way. Trying to capture a smooth move, trying to trade up and down, in and out, in and out, in and out, in and out, get stopped out here, burn through hedges there, busted call options there, busted weekly options there, maybe capture little few good breaks here and there. But after all said and done, while the S&P 500 up 27, 25, 27%, some sectors up 50% this year, there's nothing to show for in your portfolio, because every time when there's a little bit of correction, a little bit of pullback, you got scared calling for the top this entire last year. And that's not what we want to do, because none of us knows where the top is, right? We talked about this last week here. Prior resistance acting as new support. That's what I call a pivot. There's another pivot right here, right? So we want to continue to give benefit of the doubt to the buyers because we're in the overall uptrend, primary, long, midterm, and also looking at the daily chart also in the short term, right? So short term on the daily chart, short term on the 65-minute chart, they're different. I want you to understand. We just got the gap here. We just see a shenanigan gap down, and this kind of stuff happens all the time. We saw that happening right here. We saw that happening right there. There's that little shenanigan gap down there. There's a shenanigan gap down there. There's some kind of gap down. This isn't new. Only reason why you feel like this is new, and it'll feel like every time you're trying to do something in the market comes and punish you because you're chasing after a move. Right? Maybe you're trying to short it here, you got busted, and then you're like, okay, this market come back down, and then, all the way through, you're like, missed this entire rally, and then you're like, okay, finally, okay, I think this thing is ready for Santa rally, and trying to go long here, something like that, and then market comes back down, right? You had your Lotto, YOLO, weekly, out of the money options, or some stupid thing like that. And then now it's just like freaking out and just ruining your entire Thanksgiving weekend, being all grouchy, and your family members be like, what's wrong with Steve, right? And that's not what we want to be. That's not what we want to be. And I hope that none of this scenario that I just talked about is actually in your situation. Because fluctuation, 2%, couple percentage, down, up and down movement, it's given. As soon as you start trading in this market, you signed up for this. So crying about this kind of corrections, so you're contradicting yourself. You signed up for this. You knew market isn't going to go straight up. Did you really expect after seeing this kind of rally, it's gonna go straight, keep going higher and higher without any kind of shenanigan or some sort of gap downs and corrections and pullbacks along the way? Let's look at it objectively here. So just kind of, again, when you zoom out, just everything gets a little bit more clearer, right? When you look at a big picture, everything just everything looks just a little bit more, understandably well expressed. Did I articulate that correctly? So that's moving average right here. This is my short-term moving average on my daily chart. And so that short-term moving average does have a pretty impressive resume. It seems like it doesn't mean it always gets respected. So you can see right here in October or so in November, we did get break below that. But thankfully, my long-term moving average was in that vicinity, not to mention my rising pivot was there also. And that kind of stuff happens here and there. So you can see right here, if I zoom out a little bit further, there's a little bit of fluctuation where my price gotten below my short-term moving average couple times, but it hung there a little bit. But you can see that direction of that short-term moving average is always on an upward movement. What does that mean? Well, that means we must give benefit of the doubt. Because if you've been calling for the top, you've been doing it for the last 2 years, and you've been wrong for so long, and you don't even want to admit it, right? So let's not do that. Let's learn from our mistakes and never to make similar mistake again. You must learn to respect the trend, honor the trend. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed, and none of you knows what that means. So we must understand what that means. We don't have any clear signal the market has been reversed. You know what I'm saying? We see that market is in a strong trend, a strong stance, but market doesn't always go straight up. And especially this year, it's been a difficult year just because we really didn't see a lot of smooth rallies. Again, only 2 times. Very, very extremely difficult market for any short-term trades trying to capture this smooth rallies, because it only happened 4 weeks out of 50 weeks we've been in this year. So, just looking at this though, I want to go to NASDAQ here real quick and not let this, video get too long in this Thanksgiving weekend, because I want you to spend more time with your families. So this is currently right here. Let me put this number or line right there. So it's a 453. That's a prior peak right there. So if we get there, 453 is a level, is a support, and that's a level coinciding with my short-term moving average currently residing at 455. This down gap is going to be a problem, right? So buyers need to fill this gap as quickly as possible. Best case scenario, gapping it back over above it, because once the gap gets filled, it's going to act as resistance. You might have to come back down afterwards. If you're a bear, if you're a seller, if you're really looking to see a short, lower prices going forward, you know what? I'm going to put in the gap right here, because there's another gap right here, so that you can see. I didn't even see that gap, but you can see how that prior peak and my short-term moving is telling me that's the important level of 455, because I didn't even see that there was a gap. There is a gap, because remember, right? This is where we close on this day, and this is where we open. So there's a little gap there, and that's a gap right now residing at 455, coinciding with my short-term moving average and prior peak, which could turn as a pivot. So either we go to 50, 453, and if you're a bear, you're a seller here, you want lower prices, right? What you want to see is this gap gets protected. As long as this gap isn't filled, ladies and gentlemen, it's going to be hectic for the buyers. For bears, that's one weapon. Yes, we're an uptrend. Trend is strong. You really don't have much to work with looking at things long-term, mid-term. But in the short term of things, as long as this gap remains open, if you're a bear, you got a short-term weapon here. And then you fill this down gap and continue to make your way to the downside. However, short-term moving average, gap bear, that's going to act as pretty strong support, right? So going into next week, 455, 453, important, strong support. This entire gap area, resistance for the bulls. Let's go NASDAQ here real quick. NASDAQ, as you can see, the gap is actually much smaller in the NASDAQ, and that's going to help the overall market, because NASDAQ is holding up much, much better versus S&P 500. S&P 500 got a bigger gap, NASDAQ smaller gap, and most of the half of that was filled during today's session here. But looks like that's a current micro-term to short-term support, and my short-term moving average kind of guarding this vicinity right here, 381 rather. That's a prior resistance. So that's a prominent level. That's just because it's a prior peak there. And then it looks like we got a little gap. We have a little gap right here. Do you see this little gap? There you go. We got that little gap. It's still open. You can see that. It's a little gap open. That's a level 381 prior peak. And my short-term moving average residing in that vicinity. So going into next week, if bears continue to push below 389, 381 will be important next. So for my short-term moving average residing in that vicinity. Obviously, if you're a bull, you gotta fill this gap. It's a small gap. It's probably easy to fill. Fill that gap quickly. Make a way for the buyers kind of gap back up there. But over again, trend is up. Primary long, midterm. In the short term, in the micro term of things, we got a little bit of fluctuation, a little bit of shenanigan today. And that gap is gonna be the key going into next week. Let's go to gold here real quick. So gold is struggling. Remember, this is what I talked about last week. Not prior, but it is prior resistance. Continue to act as resistance, and that's resistance. Prior resistance acting as new resistance. That's resistance. Life is hard in gold market. It's been hard this entire year, and that's life. You trying to come up. You trying to make something for yourself, right? There's gonna be resistance you need to overcome every single time you're trying to do something. You trying to make a trend. You trying to establish for yourself. There's a resistance that's gonna be in your way. You must reclaim, overcome, push through, and that's what gold needs to do. Next, Bitcoin. Well, the Bitcoin right now gotten below that pivot, and we talked about. I'm gonna remove that because we just gotten below it. So what's happening right now is there's another down gap here. It looks like it wants to go back to 420.25 and that rising pivot, right? Or that's not a pivot, that's a support, right? That's a support coinciding this gap area. So 422, I'm referencing to this number. These numbers are 42.25 or 40.11 is gonna be stronger support. These down gaps, man, that's gonna make things hectic for the Bitcoin buyers. You can see this down gap that opened up early 2021. In April, tankage came. That gap still remaining open. Definitely bulls got scared when it got up there. Not even able to feel a little bit of it. And then these things are coming down pretty hard. Bears are hanging around in that vicinity, pushing the prices lower. So 42.25, 40.11 to hold next week for Bitcoin. And ultimately, man, if you want to see Bitcoin making new all-time highs, all these gaps must be filled. And those down gaps going to make things hectic going into next week, right? So I have my, special Thanksgiving special invitation continuing here until end of this weekend. So Sunday evening time, this special will expire forever. So right now what I'm running is 15% off quarterly and 25% off annual. But keep in mind though, my annual prices is already a 20% discounted rate. So on top of that discounted rate, you're gonna get extra 25% off annual. And these prices not currently marked here. These are regular pricings. So these special discounted pricings is marked when you click on the special offer, right? So I think, and right now I just released this special report, coming correction explained. I just released it like several days ago for my members. So with all the membership, you're gonna have access to this most recent report, along with the market bubble. The biggest one is on its way, and this report and other like 5, 7, 8 reports that I've done last couple years, and a couple more this year and last year, which is all, these are all, we're talking macro and secular trend of things. We're talking big picture, because if you understand the big picture, what's going to happen is when there is a correction, up and down movement, shenanigans, you look for opportunity rather like getting all scared and start like running away, right? So this special report, I talk about and analyze the market, because the S&P 500 has not seen a real correction this entire year, right? The biggest biggest decline we saw this entire year was 6%, 6%. So I'm forecasting there might be 15 to 20% correction coming. I talk about in this report potentially when we're going to see that correction, how we should position ourselves, and then how we can take advantage of it when that happens. And that report is available for all the all the membership tiers here. So again, these are regular pricings, but 15% off quarterly and 25 additional off annual if you click on the special offer here. So, obviously with the membership, there's a lot of guidance with the market corrections, up and downs, shenanigans, you know what I mean? Understanding macro trend analysis. And if you want to learn all of this stuff that I'm doing, the analysis and all that, there's a video lesson library, like 100 hours or something like that. It took me like several years to put it together. You get access to that. Obviously, there's a special report, weekly report, monthly report, midweek update, semi-monthly report. Well, with the VIP. So I go through all of my current holdings. I review them, for the VIP. I review them on a weekly basis and look at the market. And we're talking, all of my holdings of holdings of like options, stocks, leverage ETFs, commodities, including gold, silver, miners, and things like that. And obviously as a member, you'll get updates or real-time alerts, all of my entries, exits, and adding to holding positions. So there's so much going on, but I think, the biggest thing you're gonna really appreciate with my membership, it's not just mundane analysis where they're just going to give you levels every single day, but understanding the psychological aspect and the mental aspect, emotional aspect of this market, understanding to go through the up and downs of the market, not letting this market bully you around, getting rid of your old bad habits, right? Habits of getting into this gambling, YOLOing, lottoing, stupid trades that just eating away from your, capital and just not amount to anything and missing out big opportunities. That's what I'm going to make sure that you turn from your old ways and start looking at things in the long term and to grow your portfolio over time with the compounding effect that could be played in your favor. And at the same time, I'll play options. I play leverage ETFs to juice up your portfolio and to make sure not always a place to trade, because I want to make sure I do not want to burn money. I hate losing money. I want to make sure I want to get in at the right time. You know what I'm saying? I'm not saying all my trades are winners, but I want to make sure some seasons, I haven't been trading options last several months, 2 months, I think, or so, just because I knew this market is going to be a difficult market for options market. Seriously, though, this entire year has been really, really difficult year for options. So what I relied on so much is mostly a lot of like leverage ETFs, the triple share, double share. You can work with those. And then like finding these value investing stocks where you can buy low and not, and buy low and then, ride the upward move and not chase stupid stocks like COVID stocks, like Zoom, PayPal, Peloton, T-Dog, Zillow. All these stocks are crashing down this year. Unless you got in early last year, if you chased them late last year, that these guys are all crashing down very, very heavily this year. So, like a lot of people neglected stocks like, bank stocks last year, which I got into all the bank stocks. I'm talking all of them, like everything. Wells Fargo, Goldman Sachs, JP Morgan, Bank of America, US Bank, like Capital One, everything. Like, last year, everybody was like, neglecting them. They're like, oh, bank stocks are obsolete. Banks are obsolete. You know what I mean? Like Bitcoin is the future. Like all these, all these different, the payment processing stocks are the future. They're crashing. PayPal's crashing down. And what else? Squirrel's crashing down too. Is it Squirrel's down? But bank stocks been holding up, been making a move this year while they're lagging. So you see, you don't ever want to chase stocks unless you got in early, right? When you get in early, you don't buy it at the high. You hold through it and then maybe take some profit. And don't ever chase these hyped up stocks, because when they're too hyped up, they start crashing down later. So understanding, finding good value stocks, holding through the up and downs, and then riding the full on rally, the primary rallies, so that every time when there's a little bit of correction, a little bit of shenanigan, you're not gonna freak out, start peeing your pants, and then you start getting all like worked up, and you're just getting all irritated and desperate and aggravated, and everyone can tell that you're just having a bad day. That's what I'm trying to do here at Trader Talk with my members. And again, it's life. It's serious. None of it is guaranteed. We try to strive after being efficient, sticking with the setups and strategies that's been working well. There will be drawdowns. There will be correction. There will be losing. Many losing positions and setups and trades. Yes. But if we can able to ride the primary rallies, and that's where you can truly work on building your portfolio for growth over time. You guys enjoy the remainder of this Thanksgiving weekend. I'll come back for you next week. We'll reassess the situation. We'll go from there. Enjoy your evening and good luck trading next week.